Hi, my name is Darren Joseph from HTJ.tax. We're the team that seeks to demystify this sometimes confusing world of international tax and the privilege of having a deep conversation with Mark. Mark, can you please introduce yourself?
I'm Mark Morris. I'm based in Switzerland. I've been here for about 26 years. I've specialized in automatic exchange of information, which originally was the EU Commission's EU Savings Tax Directive. And that went on until about 2014, and they scrapped that and they adopted the OECD's FATCA made into CRS.
So can you share with us what it is you do professionally?
Primarily, I provide custodial services for trusts to hold underlying entities or partnerships or unincorporated funds. So what I do is I provide the administration services for the custodial. I don't do the actual custody. And later on, I'll explain what administration services for custodial is. And I'm an expert in CRS and CARF, and I certainly know the intricate differences between CARF and CRS. We'll get into that in a later question, okay? I've published over 600 articles on LinkedIn, and I'm still writing about 10 a week. And I don't see other people covering 99% of the topics on CRS that I cover.
Okay, thank you.
Who's the account holder if a nominee holds the account for a custodial institution?
Yeah, so this is interesting about CRS. CRS says if you're a nominee that's not a financial institution, it doesn't really say if it's an entity or not, but by saying that if it's not a financial institution, they're likely talking of nominee. If an entity nominee is holding the assets for anybody, okay, any entity, the nominee is not the account holder. And this is very important for later on when we talk about CARF, etc. The account holder is then treated as the person for whom the nominee is holding the account for. So that's interesting because there's no account holder that's the nominee. And a lot of people don't know that, okay? You just ignore the nominee. Now, if the nominee is holding the assets for a custodial institution, and the bank says, okay, the custodial institution is the account holder, who's the person that the nominee is holding assets for? It's one of two things, okay? It's either the beneficiaries of the custodial institution, or my strong view is if they're treating the person who's holding the account, then that person is a custodial institution, which is non-reportable. And so there's no look-through. Now it's up to the custodial institution, if it's a trust, to report. And who they're going to report on? They're going to report on the beneficiaries, not the settler or the protector, because custodial institutions do not have equity interest, which I explained just now, even though it's a trust. There's no equity interest in a custodial institution, even though the custodial institution is a trust. And again, that goes over the heads of everybody. You're a trust, therefore it's the protector, it's the settler, it's the beneficiaries, it's the trustee. No, CRS doesn't say a trust that is not an investment entity. You treat, all those normal parties as financial accounts. No.
So it's unclear.
Yeah. That if a trust is a custodial institution, there's no equity interests. The equity interest only applies to trusts that are investment entities. I think it actually says that in CRS. I've got the clause on. Actually, it's unless they come up with this anti-avoidance, you've set this up to avoid CRS, and therefore the equity interest. But then that's subjective by the nominee.
And it gets messy. Okay, I understand.